a division
Welcome back.
in our relationship since this started because I'm doing everything I can to acquire this property for her. And she is trying to do everything she can not to pester me about every little thing she's feeling every single day.
Welcome
So
back, guys.
imagine that. Like it,
Welcome back, guys. Good evening, and how you all doing? I hope you all have a great weekend. And it's your weekend. I hope it was nice and you did take your time to study, because one of the greatest things every trader needs to do is to dedicate time to study. And you look at this chart. I don't mean to go and watch or to go on Twitter and go and read trade and go and read all that. No, I mean taking your time looking at these candles, the past candles. How are they forming? Like there is a whole lot of story you can read out from this particular scenario. A whole lot of stories. There are stories behind these moves, and if you take your time, you sit down, you can actually read those stories. But if you already know the language behind those stories. So before we dive into today's business, today business, like I always said, this is Digital Wealth Academy, and we did analysis like this every day on YouTube, and we mainly focus on euro and dollar index. So we are like an entity that focus only on a particular pair. We don't rationalize our trade. We don't trade different couple of pairs. We make sure we have a focus on a particular pair. That doesn't mean we can't trade other pair, but that means that we want to focus on a particular thing and make sure we do it, and we do it the way it's supposed to be done. And to add it, there's no amount of money you cannot make from one pair. That money you want to share into different pieces into other pairs. What if you take it together? Then collect an informed decision, like we did here every day. Collect an informed decision and use that money all together and trade. Well, lie if you take your time, you collectively determine the bias of that market, and you know what you're doing, because as time goes on, if you continue to do it like that, you will continue to gain an insight. You will continue to understand how this particular pair tends to move, when does it tends to move, and how does it give an opportunity to engage. I just like to add all these to my video, because it's not about me telling you when the next price is going to be, or telling you what happened today and all that. No, no, no. I want to integrate something that can create value, some sort of value into your mindset to help you grow. Because if you since I realized I've been since I realized that one pair, there's no amount of money you cannot make from one pair. That is the deal breaker for me. So I focus on that particular pair, and I make sure I did this like Euro US dollar and dollar index, which if you've been watching my videos, you can see how the two markets work in hand to hand. So not wasting our time. If we still got time after the end of this video, we can, advise, we can talk to each other more. But before then, let's, dive into the business we have today. Today is Monday, 15th of January 2024. So if you always come to my videos, you can see I have my dates, the time, and the market, then the day. The D represent daily candlesticks, while the 4 H represent 4 hours. So 1 H represent 1 hour. So I just want to clear to that, because some people come to my DM and ask me some question like related to that. What does this mean? What does that mean? So I have a live session, a live session going on my Telegram channel. You can check the link on my bio to join my Telegram channel. So I have a free lecture going on. So if you want to be part of it, you're welcome. Now let's dive into today's business. Like I said, now this is the daily contract for Euro US dollar, and on the daily contract, we since this is the beginning of the week, today is the beginning of the week, and it's already delivered. Like we said on Friday, that like which is last week Friday, that we expect to see next week, rally on euro to drive price lower, like the price of euro to go lower into the deep discount, which is the the discount daily fair value gap. But let me not jump the steps I have laid down on my notepad. So let me go to my notepad and read out those steps and how I look at the market for today. Now, the Euro US dollar daily contract for Monday, 15 January 2024 did deliver as called out on Friday. Now, the Euro US dollar deliver an indecisive candle in today price candle delivery, taking out Friday low. Now, some people ask me that I usually come that and I say that the market deliver how we expected it to deliver, but yet it did not take those measures, SI liquidity measure. Let me tell you something. Every daily candle low or high is a sell side liquidity for me. Let's if I'm expecting tomorrow to be bearish and consequently tomorrow candle came and take out this low. Yes, because this low is a significant target for me to target. I have this low. After that low, what next low? This we have Thursday low. After that low, what next low? We have the Wednesday low. After that low, we have Tuesday low. So this Tuesday low now is now significant, but it's not compulsory that we have to take all this low in a particular day. So, but as long as we keep taking the low and we keep expecting low to be taken, then we keep calling out the low out. That means you are precise. That means you are able to call out the direction which the market is moving. That is what we are mostly important in, we are mostly concerned with. It's not about because you say the market is going to be bearish and some people want it that particular day to just be bearish into. No, 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 no. That's not how this market trade. Okay, especially when the market is in an area of consolidation, just like the area we are now. This area is a very area that you need to be technically and technically advanced, and you need to understand the mechanics behind this particular period of time in trading, because this is consolidating. We are in between the premium and discount. So market going to the discount and come back to premium. So between these ranges, we are trying to consolidate. And when market is consolidating, it's accumulating order to deliver. And now when it is accumulating order, how does market accumulate order? It accumulate order by deceiving people, uninformed traders into the market and taking them out again, deceive them in, take them out again, deceive them in. So that is how it tends to accumulate orders. Then it now accumulate order at the buy side and the sell side. Now, until we see maybe a sweep of liquidity, a higher time frame sweep of liquidity before the market go to the higher time frame draw on liquidity, or we see a manipulation, then a distribution, or we see a distribution, a retracement, and continuous. So that is the mechanics behind that. All right. So I'm already, giving you more insight. Now, the euro US dollar is trading at premium price and still inside the short time ranges, inside the short time or trading range, which is the consolidation I am talking about. Now, today is bank holiday in US, resulting to the little volatility in price. Okay, today is the bank holiday in US, so there were not actually volatility in the market, and that's why you can see that candle almost is purely indecisive, just one single like cross, which is this particular candle. Okay, so the euro US dollar short term draw on liquidity favor sell side delivery. Reason be that we expect euro to trade into the discount daily fair value gap or BC, which is essentially the best discount PDRs, meaning that the euro dollar we expecting sell side delivery, and we want the euro dollar in a short time period, maybe within 1 week or 2 weeks. We want to see euro price inside this daily fair value gap. This thing can happen in a day as well, but depending on the volatility that was present in the market and how the market maker want to do it. But no matter how they are going to come into this area, it is always going to leave a footprint for you to know that the market is willing and is very ready to come into this area. That is if you are well informed. Okay, that is where I stand to. If you really want to learn how to do that, you can join my Telegram channel and let's kickstart. I have lecture there every Saturday and Sunday. It's free, no money involved. And the it is very important that we know we are going in on euro US dollar this week looking for sell side delivery and or short opportunity, and still very cautious of the fact that market could reverse and respect the weekly and monthly draw on liquidity. Now, on the daily, this fair value gap is a daily draw on liquidity that we expect the market to go into. But not forgetting that on the monthly and weekly, we have this buy side delivery as drawn on liquidity, very boldly saying. So we're just expecting short time retracement and long time distribution. So knowing this at the back of your mind, the market maker might decide not to bring the price into this discount level and they continue pricing higher. So if you know this and you have this at the back of your mind, then you are now going to trade. You are looking for shorts, but you are trading with the minimum amount of risk and very conscious and looking at price to see what the market maker is giving to you, what the market is really presenting. That is where I tend to turn. That is price action reading. You are reading at price action and seeing how the market is distributing. Is it time for you to change your bias, or is it time to continue with the right bias, the one you have? Right now, I still favor the market coming down, but my bias could change if I see a change in the market. That is it. So you're not supposed to stick to a particular bias, but you have to have the ideas and the premises behind your bias. That is very important for you to know. Now let's go to the dollar index so we can call out those areas. Well, this is the dollar index and the daily. So I'm trying to, if you observe the way I do this video, I'm trying to rush to be able to get this video done within 20 minutes. The reason behind that, the app I'm using to record this video only afford me to do 20 minutes. It's trading view and I'm using it for free, so they only afford me to do 20 minutes. And sometimes I tend to rush this process, and I hate the fact that I'm rushing it, because there are some certain things I really did not take your attention to, and I should have said it, but you know, let's not complain. That is, we taking our complaint out and focusing on the process. So never let anything to hinder your process. Just continue. As long as you can do it, do it. Now the 4 hours, the euro dollar, we can see the DXY, sorry, I'm confused. The dollar index, we can see there is a this yellow line here is the new week opening gap. Now this new week opening gap, there is a jump from here to here. The market close here, we are supposed to see an open here, but the market did not open, but will jump and now retrace back before seeing this. This is a new weekly opening gap, and we use that in form of a support or a resistance for price. Okay, if you are support and resistant traders. So I'm looking forward for this one to for the market to come inside this new week opening gap, then reverse in tomorrow price. I'm just like in the maybe in the early trading hours, I want to see it market come inside then before we see a market to price higher. And we also have another one inside this weekly fair value gap, another new weekly opening gap inside this one. But I've not been talking about that in our previous videos. Reason, like I said, there are things I am seeing in chat I'm not talking about, but it's on my it's on my notepad, and I keep it specifically for myself, because it's not everything I could actually say. So I'm looking for there is a daily bearish order block on the euro on the DXY, which I'm looking for that as a reference towards the daily fair value gap I am looking to um on euro. So if euro price to the daily fair value gap, then I'm expecting to see the XY price into this sell side fair value gap, to this daily sell side imbalance and fair value gap, and consequently to this daily bearish order block before we can see a retracement, before we can expect a retracement. And since these PDRAs are in deep premium, so it makes it very interesting to expect price to go to that area. So let's go to the 4 hours. This time is rushing, like nah, give me time now. Here come the most interesting part about this video. I'm done. Now on the 4 hours, we can expect to see we see a 4 hourly fair value gap here and a 4 hour bearish order block. So it is going to make more sense if market price and take out this buy side liquidity, then price into that 4 hourly fair value gap before we can support that. We support the idea of seeing a very great downward retracement in price, like the market to now go down. So and we can also see that there is a lot of orders below. This is according to support and resistance traders, they will draw this and call this area a support area. That is, whenever market get into it, it leave it, get into it, leave it. You can see I call this area since last week. If you go through my all my last week videos, you can see that I've been referring to this particular area in price. Whenever market get into it, they leave it, get into it, leave it. Even today, market straight into it and price higher. So let me read the statement I have here. The Euro US dollar for hourly contract shows nicely how market deliver into the trading range. Now, the 10 a.m. New York local time for hourly candle deliver the sell program after the sweeping of short time low. That is, this particular candle deliver the sell program for today. It is the major price swing in today price. Now, the PDRs that support today trading is a sweep on short time internal liquidity, which you're going to see it in the 1 hour. Now, the fast forward, let's say we casting forward in price, we can expect euro to trade into the ICT 4 hourly fair value gap, which is the one I just mentioned, or CB, and the ICT 4 hourly bearish order block above today high, above the high of today price. Then, since we're looking forward on the daily for euro to be bearish, we can use the above mentioned PDRs to support the buyers. Meaning, since we are expecting tomorrow to be bearish, we can use this above PDRs to support the buyers. That means if they give the opportunity for us to come back here, which is more interesting. But if they did not, that is fine. But the market is willing to go lower. So let's go to the euro dollar and the XY, and let's see what we can have to say in that price. So this is the dollar index 4 hourly contract. We can on the 4 hourly contract we can also call this particular candle uh, a uh, a uh, a bullish order block, and because it leads to the formation of a fair value gap. Now, why I expect euro to price into that 4 hourly fair value gap or 4 hourly order bearish order block is that the fact that I'm expecting this to price into this new week opening gap. Between this new opening gap, I'm expecting the market to get into that areas before we see before we expect the market to continue giving us higher prices on dollar index. So that is just the narrative within this particular time frame on the dollar index. So let's go to the 1 hour. I want to just finish this video. I have 3 minutes left. So this is the euro dollar daily 4 hour 1 hourly contract, and the euro dollar hourly contract for June, for Monday, January 2024. So now we can, this is our 4 hourly fair value gap and CB. This is our 4 hourly bullish order, bearish order block. And we can see the high, which is the buy side liquidity that I'm expecting to see the market take out before we see a retracement in price, just like I use this particular line to indicate that. And let me read this statement. Now, the Euro US dollar hourly contract shows how nicely price has traded for Monday, 15 January 2024. Now, on the hourly, we can see how Euro market was ranging in today price in New York session, and how price did deliver, and the hourly swing high that was swept before price deliver lower. This particular swing high was taken out before market deliver lower, which is a buy side liquidity that was swept before we see a decline in the price. And on the hourly, we can actually see uh, um, the whole range. This is the New York session high, New York session low. It is very short and it was ranging. Now it is only the London session that did give us a nice price delivery, which is what we tends to talk about when we talk about you know how bank holidays affect price. So now, looking forward, we can expect to, like, I still favor the idea of market coming to this point before we see. If we didn't respect that, that is fine, but it's making more sense if we can see that market rally higher into this, and it will give us a nice delivery price to go lower. So this is the dollar index as well, and this is the hourly contract. We can see how this area look give us a bullish order block, so we can expect the hourly bullish order block to respect our draw on liquidity. And if market get into this area, we can see it, expect it to go higher. Okay, that being said, I am done, almost done for today videos, and as you can see, my time is clicking. So thank you for watching, and if you find this insightful, please do give us a follow and subscribe to this YouTube channel. Thank you, and God bless you.